Welcome to the Real Estate Espresso Podcast, your morning shot of what's new in the world of real estate investing. I'm your host, Victor Menashe. On today's show, we're taking a closer look at global currencies. Russia took a clever step this week to evade global sanctions by attempting to peg its currency to an ounce of gold. Russia's central bank holds more than 2,000 metric tons, worth roughly $140 billion, according to the World Gold Council. That represents the world's fifth largest reserve, a hoard that's been built up in recent years, including purchases from domestic producers. The gold is stored in vaults in Moscow and around the country. Russia's central bank resumed its gold purchases from local banks on Monday, but it set a fixed price on the precious metal. Starting this week, the Russian central bank will pay a fixed price of 5,000 rubles, about $52 per gram, between March 28th and June 30th. This is below the current market value of $68. The central bank added that the resumption in buying will ensure supply and uninterrupted production of local gold. Now, 2 weeks ago, Russia's central bank announced it was halting its official gold purchases due to a surge in demand from regular customers. But meanwhile, Russia's Ministry of Finance also referred to gold as the ideal alternative to the U.S. dollar. Setting a fixed price for gold reminds me of what the U.S. did in the gold standard years, the period between 1879 and 1914, known as the Classical Gold Standard era, during which period 1 ounce of gold represented about $21. Every dollar in existence was backed by the corresponding amount of gold in national gold reserves. But then along came the First World War and then the Great Depression. The U.S. tried printing its way out of its problems. Velocity of money slowed to a low as the crash of the stock market in 1929 wiped out a lot of wealth and the entire population hunkered down. Then in the 1930s, President Roosevelt, under executive order, confiscated all of the gold in the nation and reduced the value of the dollar in gold by pricing an ounce of gold at $35 instead of $20.67 on the day they confiscated the gold. Economic sanctions have rarely worked in changing behavior of governments. Sanctions have made things difficult for the populations in Cuba, Iran, Venezuela, North Korea, and countless others. But these governments are still in power. Economic sanctions will not topple the Putin regime either. But Russia is rich in resources that first world nations are dependent on. In response to escalating sanctions from the West for Russia's invasion of the Ukraine, Moscow said that unfriendly countries would be required to pay for Russian gas in rubles or gold, according to the chair of Russia's Parliamentary Committee on Energy. The question is whether international players will play ball with Russia, whether they will trust Russia to honor the seemingly low price for gold. Russia is trying to buy gold at below market prices, and if they're willing to sell gold at below market prices, then they'll probably get a lot of takers. Establishing the ruble as a gold standard is a brilliant tactic against global sanctions. The U.S. is not prepared to stop printing money. Japan is not going to stop either, and the U.K. can't stop, nor can Canada and many other countries. In fact, it's not even clear that Russia can be trusted not to print its way out of its problems. Russia only has $140 billion in gold reserves. That's not enough to back every ruble in existence with the equivalent amount of gold. Proclamation of a fixed exchange rate with gold doesn't mean that Russia is fixing its float of currency and making it truly redeemable for gold. A true gold-backed currency has enough gold to satisfy the demand on redemption. While the fractional reserve that Russia currently has amassed is impressive, it's still about a quarter of the gold reserves held by the U.S., and the gold reserve by the U.S. is the largest in the world at over 8,000 metric tons. But here, too, there's no illusion that the U.S. holds enough gold to back the U.S. dollar. But if another major currency was to peg its currency to gold and return to a gold standard, then there could conceivably be a real challenge to the dollar as the global reserve currency. In the meantime, the tactic may prove effective in convincing countries like India and Pakistan to trade for oil in rubles. Even Europe is dependent on Russian gas in the short term and may be forced to pay in a manner that's acceptable to Russia. I believe the assault on the U.S. dollar's position as the world reserve currency is underway. It will not likely be one attack on the dollar that will topple its position, but it'll be a number of moves including Russia, India, China, Saudi Arabia, and perhaps others that trade with China that will ultimately, over a period of time, erode the U.S. position as the dominant reserve world currency. Russia represents about 9% of global oil production, and this amount of energy being traded outside the dollar or the euro could be the start of a slippery slope of the erosion of the dollar's dominance. The outcome of the war in the Ukraine is far from certain. Western countries should be under no illusion that economic sanctions will have a lasting impact in Russia. As you think about that, have an awesome rest of your day. Go make some great things happen. We'll talk to you again tomorrow.